A lot of volatility in markets over the last 24 hours, twisting and turning based on all of the clues we're getting around the China narrative. Have you learned anything new of late around the direction of travel there?
I think possibly we have learned something new this week in terms that we have seen a point where Trump has clearly responded to market stress. I'm not sure I want to go so far as to call it the much talked about Trump put. I don't think there's a set level in the sand, but I think he realised that the news flow is sounding overly negative, and I think it's helped give Bessent a bit more sway in the White House administration, it seems, and therefore to kind of provide a bit more balanced tone. But we're still getting this massive policy uncertainty. I think that the kind of markets the last couple of days are set to persist, potentially for a number of weeks, although it's very hard to make a long-term call under this administration. Long-term is really beyond the next 24 hours, it seems, because there might be a whole new catalyst to change it. But the base case is the markets the last few days continue. What are those markets? They are kind of slightly whiplashy markets, but with an overall positive tone. And the reason I say that is that I think that there's going to be to and fro on trade negotiations, tariff deadlines, and the fact we're getting trade deals. I think the marginal news flow is going to be a net positive. It's going to run into the fact that the underlying structure is so brutally negative that it's not going to get us back to a good, bullish, positive story. But I think the relief rally overall is more to go in choppy conditions.
So is it just a mechanical uncertainty comes down, volatility comes down, risk goes up?
I think that's fair. I think that's absolutely part of it. I mean, there are some pure, as you say, you use the word mechanical there. People have vol-adjusted targets, and so essentially as vol comes down they have to kind of allocate more risk. So there is a simple mechanical part, and that's not the large part of the market here, but that is simply the case that as we get some positive news flow, people have been trained over the last 15 years to buy the dip, like Pavlov's dog. And so therefore we get positive news flow. People are going to go, maybe the low is in, maybe we've seen the panic, maybe this is like 2020 in the pandemic, where March 2020 was just horrendous, but that was the low, and people who fought the rebound were mistaken and wrong. I think people are going to maybe buy into that narrative and get kind of enthusiastic. So I think that relief rallies can be quite powerful. I do think that the structural story remains very bleakly negative on a relative basis for US assets. And I think there's a lot of money, trillions of dollars, to come out of the US over the coming years. And that is a story that shouldn't be played out in the space of a couple of weeks or a couple of months, but it's a valid story.
Mark, I've checked it now. Gold is up again, more than 1%. Are commodities going to stay the refuge of choice?
Not all commodities, definitely. Clearly, precious metals might be one kind of haven. I think the kind of gold traders, have had a valid run. I'm not particularly excited by it at these levels. Remember, it doesn't yield anything. I think other industrial commodities are going to continue to suffer them. Not just oil, but copper. Many of these have suffered, and I think they've got much more downside ahead.